Ashish Goel, co-founder 5, Shrikant PV, Chief Bajaj FinServ Digital Platforms, Shri S. Raman, Chairperson PFRDI. Ramanji has a very distinguished career. He earlier was head of SIDBI in India. And to moderate the conversation, we have with us Shri Jagjit Singh Sareen. He is part of CIU. He's area chair climate finance. Plus, he is also global Dalberg Advisors. I'm taking this opportunity to thank sponsors, NABARD as diamond sponsor, silver sponsor Peji, SIDBI, associate sponsor the Shamla Advisors, and strategic partner ONDC. So ladies and gentlemen, the session is Financial Services in the Open Network. Can we have with us Dr. Shaji KV, Chairman NABARD, Shri Ashish Goel, co-founder 5, Shrikant PV, Chief Bajaj FinServ Digital Platforms, Shri S. Raman, Chairperson PFRDI. We may be joined by Joint Secretary DFS. He has just entered a meeting with DFS. So he's rushing from his office, but I don't know whether he'll be able to join us during the conversation or not. Jagjit, are you around? Yes, please come forward. Mr. Jagjit Singh Sareen, the mic is yours.
Thanks, English. I know we are getting close to the end of our deliberations, and we are bringing the most heavyweight panel, not in the material sense, but in the intellectual sense. And I would say, let me start with the personal admiration of Ramanji. First time I met him in his office in his previous role, he was wearing a double-breasted black suit with stripes. And normally, when you go to bureaucrat's office, very, very senior bureaucrats, you normally don't end up meeting, a very refined gentleman with double-pressed suit, pinstripes, shining shoes. And I was like, who is this guy? He doesn't look like a typical bureaucrat. So that was my first interaction with him, and I remain inspired by him since. Equally stellar is Dr. Shaji, who is leading NABARD, not just because they are the diamond sponsor for this event today, but the agenda they hold. I'm an agriculture economist. I've studied the impact NABARD has on agrarian economy, and the work they are doing is so pivotal, more so than ever. And now we are transforming India. The focus is on manufacturing, but unless we transform our agriculture sector, there's no way we could become Viksit Bharat by 2047. And this becomes even more interesting with Trump poking us from the agriculture side. I won't ask you the tough question there because our focus today is slightly different. Let me, with that, bring attention of the House to agenda at hand. And the topic, as suggested to us, is financial services in the open network. We all know these numbers, but let me repeat it just to refresh our memory on these issues. India's MSME remain the backbone of economy, but they face a crippling credit gap, estimated about $300 billion. Nearly 60% of business owners still rely on informal credit at prohibitive costs. And on the other side, 25 to 30% of the 400-odd million eligible retail lending customers have access to informal credit only. This session would explore how ONDC can fundamentally rewire access to financial services. And here we are talking about embedding credit, insurance, and investment products in the core of digital commerce. As I said, we have a stellar panel. We have people with regulatory experience, with financial experience, people who actually led UPI journey and now are running their own enterprise, and various other vantage point. And we hope that DFS Joint Secretary joins us soon. With that, let me kind of turn to our panel and let's hear from them. Starting with Dr. Shaji. Sir, rural MSME often face the double bind of poor credit access with high lending cost. You know, NABARD has worked for decades to close that gap, and hopefully with ONDC's transactional data, the access to credit to rural MSMEs could be enhanced further. So from where you sit running NABARD and holding this important position of principal financier to agriculture sector, how can you, give me your take on ONDC's transaction data enabling more precise real-time lending for rural MSME? Essentially what we want to hear from you is, how can ONDC as a platform be enabler to what you want to achieve through the rural credit? Over to you, sir.
Yeah. First of all, thank you for this opportunity. In fact, this is one of the important things where we are trying to bridge the gap of whatever we think about. Why that gap, first of all? First is that gap is because of lack of trust. Because when you are giving credit, there need to be a trust built. That trust can happen through acquaintance. Earlier, we used to physically interact, branch managers used to physically interact, understand the customer. But now that the volumes are huge, nobody can physically do that, and its cost also will be higher. So now there is some sort of a digital maturity which has come now with mobile penetration, and there is a digital trail. And even surprisingly, many of those so-called people who are not having access to proper finance are digitally active in terms of UPI transactions and all. So that means there is an amount of verifiability of their activity. But whether the people who are supposed to give credit, whether they are having access to that that digital trail, that is where we need to work on. So what we have done is that we try to work with the most marginalized of the sections of society. We see that tenant farmers who don't have neither a land record, they may have a KYC because they are all covered under Aadhaar, and they may have a mobile which they used for transactions, but then their activity can't be linked to the KYC because of lack of, essentially a farmer I'm telling you about. And then when an SME account, SME entrepreneur, he also, see, the estimate is that almost 60% of the SME or even more than that don't have access to formal finance. But then surprisingly, they are digitally active in terms of their transactions. In fact, many of them are into platforms, into Amazon or maybe ONDC as well. Then FBOs are also essentially aggregation of farmers, which are essentially MSMEs. So these things, what we are trying to do is that we are trying to digitize these transactions. In terms of FBOs, we are now trying to, or rather we have developed a portal to onboard the farmers into FPOs and then try to capture the transactions. That is one thing. Second thing, that for farmer, the ubiquitous offering is the KCC, Kisan Credit Card. So far, because of lack of interest in many of the financial institutions, they have not digitized those activities. So now we are into developing an eKCC portal. We have actually partnered with the fintech, and now we are linking that to the Kisan Run portal of the Government of India, which has around 8 crore farmers registered there. Then, of course, the most important activity of digitizing the primary agriculture credit societies. So at the local level, they are the original NBFCs, non-banking financial companies, where they used to do a lot of transactions, but in physical mode. So nobody had verifiability of that. Digital trail is not there. Credit bureaus are not accessing that data. So now we have actually digitized close to 65,000 of such things. So these things will create a lot of trust. Actually, the banks can view that. And then if they are onboarded to, see, these primary agriculture credit societies are not only lending entities, they are business entities by themselves. They can be onboarded to ONDC. FPOs can be onboarded to NBFCs. SHGs can be onboarded to NGOs, ONDC-like platforms. Once we do that, then we can escrow the cash flow. And that is where the value chain financing also comes in. We also did some pilots with some banks where the primary producers who don't have the verifiability part of their activity, if they are sandwiched between two nodes of the value chain, an input provider or an output aggregator. In that case, the verifiability of that primary producer, there is no need for any other instrument to be given for creating trust. So that digitized value chain approach and escrowing the cash flow. When product moves in one direction, cash flow will be there the opposite direction. And leakages should not be there. Once the leakages are there, then banks may not have that trust. So we are creating those trusts for making credit affordable and at affordable cost. Now, one small example, we all talk about NBFCs being the last mile of connective. They are doing a good job, but now 50 lakh crore is their outstanding, but their charge, we can't blame them because their cost of funds are higher. So 20% average they are charging. That means roughly on 50 lakh crores, 10 lakh crore is the interest they are charging. If it is through an entity like a regional rural bank or a cooperative institution, the cost of credit will be 10%. That is 50% of that. That means that much 50% welfare will remain with the society. So we need to now help such entities who are access to household savings to access this the last mile connectivity. For that, digital trail need to be there, and that is where we are developing this digital public good. We have in fact set up a entity that is Sahakar Sarathi Private Limited, which will be acting as the back office for all these operations, all the cooperative banks, the PACs, even the FPOs. So once we have that in place, then we can link these entities themselves, they can't directly onboard to ONDC-like entities. So they incur a lot of cost. But collectively, this is a middleware type of thing between them and ONDC-like platforms. Roughly around 7,000 FPOs are already onboarded to ONDC platform. So we'll continue that effort. Once that 65,000, at least of the packs, at least 50% of that getting onboarded who are actually into MSME-like activities, that means we'll have a wealth of data. And then looking at the digital trail, innovative financing models can be there, embedded financing, such other entities can be there. And over and above that, a credit enhancement in terms of guarantee. We are having a credit guarantee subsidiary, just like SIDBI is having CGT, MSC. We are now guaranteeing activities in animal husbandry. We are, as from the sovereign side itself, the FPOs and such other things. So that credit enhancement will be acting as the trust provider. So for any business loss, the guarantee will come in. So the banks can structure that. In fact, one more moment, I'll stop at that point because others are also there. Now, the regional rural banking layer, which is the middle layer in the banking sector, now that layer is getting strengthened because of the initiative of Government of India. At the state level, all the regional rural banks are getting merged. Now, from May 1st onwards, they are merged. So now we are actually working with these RRBs to provide a common credit infrastructure across all the RRBs. Now, DFS has taken a decision to commonly brand that. The branding, color, pattern, everything will be same. So that will increase more visibility for such institutions, which in turn will give more choices to the people at the last mile in terms of credit. And then with digital enablement, they will be able to better underwrite those activities. So all these things are now work in progress. Maybe in another 6 months, results will be there for us to see. Now, one more last point is that the resilience of Indian farming sector is wonderful because now the rural demand is catching up with the urban demand. But with the recent geopolitical issues and all, we need to protect that rural demand intact. Because the agri exports should not be affected. By that, there will be some ripple effects coming down, especially in the seafood sector, in the spices sector, and such other things. So there, we are cautious. Today, we had a discussion with Government of India as well. So there, we will be ring-fencing those risks as well. But then, we have to provide some liquidity windows. For better liquidity windows, traceability and such other things need to be there. Thank you.
Thank you, sir, for providing this detailed account of the, I would say, foundational elements of building blocks you are investing in with money and talent to build the ecosystem on which ONDC could thrive. With that, let me bring you in, Ramanji. Your role is very kind of unique in this discussion. You are the regulator of the most conservative but the largest pools of money. We need a lot of money in in a quick format to drive the startups, the MSME credit generation, where the pension funds of India should have a long play. From where you sit in managing I would say, the quality of the paybacks so that, people's pensions are secured, but also being the drivers of long-term economic growth of India, where do you see your role as PFRDA? And maybe you can pick up, some threads from your past illustrious career at various institutions along this way. Please.
Thank you so much, and it's great being here amongst all of you. Thank you for the invitation. But let me just sort of say that I was so happy to hear all that Mr. Shahji was talking about, because I have, sort of for a year or so missed the details, and it's great to hear the kind of foundational work that is happening. And I think, as you have summed it up so well, this is really about how India's basic steps and the foundations in the financial world are now getting more and more enhanced. In fact, I think we've grown so much. A lot of it is digital, but let's still be honest, as a country, we would be wrong to assume that everything's going to become digital. There is a very large part of the country which is still operating in non-digital forms, and therefore it's essential that we keep our eye on their requirements also. But having said that, very, very well put, the whole concept of long-term savings is really what lies behind the creation and the growth of large funds. And there is only one phrase that I'd like all of you to carry back home, is the power of compounding. So if you have not opened an NPS account till now, which I had not till 45 days ago, please go and open an account called NPS today, and do not disturb the money. In fact, we do not allow you to take your money out. You're allowed to take your money out only 3 times in your career. So assuming that you start at 24 or 25 and you retire at 60, you can only do a partial withdrawal of your funds of 25% of your own contribution 3 times in your career. Believe me, this is not a mutual fund. It is a completely separate animal, and it addresses just what Jagjit said, to grow the long-term capital of this country. So the power of compounding is so enormous. Go to something called the NPS calculator, which is there on the NPS Trust, and you'll put in the figures and you'll see it for yourself. So let me not take away that mystery from all of you. But the sheer power of compounding, when you allow your money to get market returns, is astounding. We are looking at Government of India putting out 40 and 50-year paper. Now, this is really the way Government of India has also, reached that level. We are yet to sort of reach the Viksit Bharat levels, but many parts of our economy are now looking more and more like the developed world. And it is essentially the pension funds and the insurance funds that buy into this long-term paper. And this long-term paper, therefore, allows for pension funds to both handle the accumulation of your money in your NPS account, and when you want the payout from your account, it is these long-term bonds that help bring the inflow to you from your savings account of a pension account. So it is truly a transformation of savings into returns at different stages of your life. And your life, working life, could be 50, 60 years, as we are now realizing. I mean, the number of gray-haired people is always increasing in every room. It just shows that we are all working that much longer, that much more. The age of 60 is just a number, it doesn't matter, we're still continuing. And therefore, it is very important to provide for a society that is growing older. So the numbers are all very much there in the public domain. The percentage of old people today in India is about 10%, which is more than 60. It's going to become 20% before 2050. So we are talking about an aging population, and therefore the requirements are going to be many more. So the number of financial products that we need will be much more, and the amount of financial literacy and awareness is very, very important. And just to mention to you that I'm not here to tell you that the equity markets are everything. Equity markets go through ups and downs, but the point is when you keep your money relatively untouched for 30 years, it sees the cycles of equity of up and down, and therefore you come out with far better growth rates of return on investment. So what we are looking towards, and there are enough people who have met me already saying that if the Canadian pension funds are coming to India to look for long-term bets, why is it that the Indian pension funds are not doing that? And it is entirely a function of how much money you've got and that asset allocation, which, believe me, our own asset allocation in this country is very safe. We allow for, at least for the government funds, which is the largest contribution to the pension funds, nearly 75% of the pension funds today comes from the government sector. We allow for equity only of up to 25%. And the remaining is government bonds and corporate bonds. Corporate bonds, again, is an excellent instrument going into the future. We've had NABFID team coming and telling us that they're going to be putting out 25-year bonds, infrastructure bonds, and how important it is for these kinds of institutions to invest in those bonds. But on the flip side, let me tell you the disappointing story also. It is, we have touched less than 1 crore people in this country when it comes to spreading the pension account. And unfortunately, reaching those those, let me say, 30 crore people or 40 crore people, as Mr. Shaji just said, how are we going to get to them? That is really the difficult story. And my only request really to all of you who are policymakers is let us look at more and more combined distribution efforts. The same distributor, the same agent of a distributor is going and meeting a customer. He can as well give him information about an insurance product, about health insurance, maybe a life insurance. He can provide details about the new credits that are available. He can talk about platforms like ONDC, which are available for people to come in and probably get a quicker return of the money from the ONDC platform, because now credit has got embedded in the ONDC platform, and also be able to sell the pension product. So we need to look at the whole concept of the business correspondent or the banking correspondent and allow for them to go into the market and reduce the costs by selling all the products at various points of time that suits the need of the customer. And it's really important for us to realize that, because cost of distribution is ever rising. And therefore we should, and one of the greatest things I learned during the time I was at the board of ONDC was how ONDC has unbundled the architecture. And it is an absolutely brilliant way of getting more and more people to come into those areas which they are good at. So if I'm good at the last mile, I should be that last mile person who holds the hand of the artisan and helps him on board, takes the pictures in his room, labels them, brings them onto the platform of ONDC, platform, network. Let's not get into that debate. But the fact remains that ONDC has a tremendous potential of allowing many entrepreneurs to make their journey that much richer. And that's really, I think, where we are looking at the real world or the real goods sort of getting intertwined more and more with the financial sector, because they cannot do without each other. So let me stop there. Thanks.
Thank you, Ramanji, providing us the captain's view of how the big investment tanker The pension funds of India are looking at expanding the credit growth, both long-term, but also seeding the ecosystem where short-term growth and quick growth could also happen. With that, let me invite somebody who's really worked on quick access to credit. Ashish, you are a co-founder of Fibe, a fintech innovator for instant personal loans and credit access. Looking at your career trajectory and the way you've done things, give us a sense, with the context that many ONDC users will be completely new to formal credit. This may be their first experience to shape and build trust in the system ONDC wants to build. So how do we design loan and insurance products that are instant, affordable, and easy for the first-time digital user? Mike is yours.
Thanks. First of all, I'm very, very happy to be here. Thank you for inviting me. Before I answer this question, to set the context, today India is going through a very big transformation. The consumption theme is becoming very, very relevant. In last 10 years, we have seen the new generation, the way they are aspiring and the way they are spending money and the way they want to owe things today and they want to live life is very, very different than the 20 years back. The world is changing, India is changing, India is much more confident than what it was 15, 20 years back. In 2015, when I left my job where I was investing the insurance money, so I shifted from managing insurance money to start thinking around how do the next generation will think around it, and we started on a path to build a platform where we can really provide easy credit to the next layer of the customers. Today, if you look at the banks and the traditional ecosystem, their core focus is the top 1 or 2% of India. And that's where they would like to really spend their money, time, and we keep seeing the news where most of the focus remains on that ultra, either middle class or the top class, where they want to, the traditional banking is focused on. And we really felt that there is, given that kind of a technology enablement which is possible, and there the DPI has really played a big part. If you look at the DPI, the UPI has really enabled us to do a lot of things. Similarly, the second piece was the bureau which was available. The third is the account aggregator networks and the bureaus, which has really, really helped us building a digitally all end-to-end journeys for our consumers. Over last 10 years, or rather less 10 years back when I started thinking around the businesses, everybody said, बिना शक्ल दिए पैसा नहीं दिया जाता है इस देश में, तुम्हें शक्ल देख के ही पैसा देना है. And we walk on that path for last 10 years, really building this piece. When ONDC came in, we were pretty excited. We were among the first ones to really embrace this technology. We were a believer that just like UPI, which democratizes the payment, ONDC as a tool or the system can really democratize the entire other ecosystem, the marketplace, the credit around it, and to bring the new to credit customers back to the ecosystem. The way I visualize today the ONDC, if it plays at a scale like UPI has played out, is very simple. There are people who are buying goods on ONDC. There are merchants who are selling goods on ONDC. There is such a wealth of data which is available. And at the end of the day, credit is nothing but how do I really find alternate source of data which allows me to decide the credit worthiness of the consumer. The problem, there are two ways you do it. One, you go to his home, sit with him, do a Q&A, find his answers, look at around, fill up a questionnaire, and then decide whether you would like to really give them the money. But that's a very, very time consuming as well as very cost ineffective. The cost of providing that kind of a service toward, let's say, a 20,000 rupee loan is impossible. And that's where my belief is that if ONDC executed well, just like UPI, can be a game changer, can be something where the data which is available from ONDC can really make a difference to what India is trying to achieve, both for merchant financing. Especially look at today MSMEs, like you rightly mentioned that while today the last mile delivery has been done by the NBFCs, but most of those last mile delivery has been done by physical infrastructure put in by the NBFCs, not by really assessing the wealth of the data which is available. The alternate source of data can be a very, very strong way of delivering credit to both consumer side from the affordability perspective. Like if somebody is buying goods on ONDC, we would be more than happy to fund it. And that is what we are doing today. Similarly, there would be NBFCs or the financial institution who would be ready to fund the merchant based on the data available on ONDC. We already are seeing today the players which are the largest UPI players like PhonePe, Google Pay, etc. They already are looking at the data and providing line of credits to the merchant and to the consumers also. I believe that the similar kind of an outcome can be generated because the alternate data available on ONDC would be much more wider, because now I will know where this money has been spent, what kind of goods has been purchased, in what vicinity has been bought and sold. So those kind of data can be very, very exciting opportunity in front of us.
Thank you. Let me now invite Shrikantji. You are chief at Bajaj FinServe Digital Platforms, scaling embedded finance in the financial services offered by your institution. My question to you is the following. See, Bajaj FinServe has a national footprint and a significant digital reach. Combining that with ONDC could be really transformative. So how do you see the partnership you have with ONDC, or players like yours could have with ONDC, and bring the accelerated, pace of financial products being provided to both consumers and the entrepreneurs which are now being onboarded to ONDC platforms? So give us your view, but also the industry you represent.
Sure. At the outset, thank you for inviting me. I would take this question. The answer I will divide into two parts. Okay. As a digital platform and as a financial company, okay, we are one of the largest ones. And from a digital platform point of view, we have around 4 crore customers who comes to our platform on a monthly basis. Okay. Now, ONDC we see as a large, a powerhouse, which can further boost our customer engagement. That's where we came from. And I would say that we are maybe by far one of the only buyer app where our objective is not to make money on ONDC e-com. First of all, the e-com platform does not belong to us because we are a financial services company. So we have tied up with one of the companies to offer the buyer app, because RBI does not allow us to do e-com. While we are doing that, the objective is not to make money out of e-com. Hence, we work very closely with them, Koshi sir and now. The objective is that the customer who comes to our platform, I should be having hooked to make him come back again and again. Now, having only financial services, that does not have any, does not give him any motivation to come and open my app. Okay. Now, with a 4 crore base that comes on a monthly basis, it can become a huge engagement platform. And ONDC for us is an engagement brick. So we are not getting into an e-com world or so, nor is it a money-making business for us. Now that's about e-com. Now the second question comes about, how do I democratize my core business? That's the lending part. And all the panelists from the morning I'm hearing, they're telling that this is the UPI moment, okay, for e-com. And I see this is the UPI moment for lending. Because today the lending it's not fragmented, but it is actually in the hands of very few lenders. Now, people reach out to lenders rather than the lending reaches out to people. I see this particular thing can really democratize how we reach out to the masses. And I've seen that last 2 months we have started our the lending portfolio. In the last 2 months we have booked around 20 CR, and it's very early. I see this as in the next 6 months going up to 100 crore loans that can be booked on a monthly basis. And that's only one company I'm telling. If there are everybody coming in, and then there's a consensus coming in, and one of the panelists earlier told, you can build really huge highways, but if you have potholes in the highways, then there are problems. Now the problem is that we have made it's an absolutely fantastic idea ONDC has brought in. Financial services has come in. But the regulation, does it allow us to do what we want to do? So one of my submission is that the LSP regulation that RBI today holds, I think that really restricts the way ONDC would do lending. So today I would need to do lending with a Tata. I would need to do a lending with Magic Pin. If I need to go and audit all of these people, I think that's something which is not doable. So I was discussing with Koshi sir also in the morning. If this can be centralized, and then you will automatically see a lot of players coming in and then taking up this cost. So from Bajaj Finance point of view, one, it's a large engagement factor for us. From an industry point of view, I see this as a movement that can change. It's a moment and a movement that can really change and democratize lending from that angle, provided the highway does not have potholes.
Well, trust me, coming from Gurgaon, I could relate to your statement and some other daily routine I have to follow. But let me ask you this, ONDC is, I would say, in a phase 2, in a step-up phase now with new management taking over, with change in board membership. What is that one advice you want to give to ONDC board to consider? One advice, and you have 1 minute.
Okay, I will be calling spade a spade.
Go for it.
See, the essence of ONDC was to remove intermediary. Okay. I think it's a food for thought for us. Have we removed intermediary really, or are we creating an intermediary in between actual buyers and sellers? So if the intermediary does not have, if they don't have a, indeed, if they are having a financial motive inside, okay, and I won't tell that nobody is going to do charity, but it should be for the betterment of the larger. If that intermediary who is working is not into money making rather than linking both the buyers and sellers, then it works out. But I've seen that in many occasions, the intermediary which are working in between buyers and sellers, it is creating another, another middleman. So one of my submission would be, and I'm nobody to advise them, but my submission would be, we should be cautious that the buyer apps that we are creating and the seller apps which are there, between buyer apps and seller apps, the customer and the final seller should not lose out. I think that should be a policy regulated one, that how much do I charge? How much do I charge intermediary fees? If that is not in picture, and that if you don't keep in mind, then we will not be really doing service to what ONDC is standing for.
That's a very clear advice coming from private sector. With that, let me invite you, Ashish. What's your advice? You have a minute.
I have 2 points. One is little technical. I think the lending protocol or the journey is really need a revamp because I think it is built keeping in mind the complexities of various stakeholders, including regulators, the MSMEs, plus the consumers, plus everyone in a single thing. As we go along, each one has a different way of really reaching out to the consumers. So SME is very different than the consumers, and that one thing which needs revamp, because the biggest thing, like what he said, to me the ONDC is like a UPI moment which everybody spoke. So can it remove the intermediation and say that okay, I can reach out directly, can I get the best offers from it, and from which it has to be very, very simpler, and it has to be in line with the standard APIs, which generally most of the time the APIs are very standard. So but it needs a different compartments to ensure that those are taken care. The second, I just want to add to the point, saying that it also needs to reduce, like today when I make a UPI payment, I don't need to go and validate another time the KYC for the transaction. So similarly, when I'm onboarding a customers there, or especially the buyer's app or the seller's app, that process has to be smoothened out to ensure that it can have a wider reach. See, the biggest benefit of a technology initiative, and especially when it is coming from government, is to have a public good. And for achieving a public good at a 140 crore population, it has to have a really J curve, like with a very, very steep stick.
Yeah, hockey
And
stick.
hockey stick is also would have means whatever it is. So from that perspective, it needs to reduce the friction. It needs to take a cognizance of the fact that there are inbuilt protocols can be built in differently. Because if we built in the same way when we are doing a bilateral transactions, it will be very, very tough to scale it up. To scale it up like UPI or like scale it up like any DPI project like Jandan or something, it really need to take those moment of leap of faith and go back and say that, look, this is the way we can scale it up very, very fast. No, it is a great, means it's, to me, we would be more than happy to invest into it. We would be more than happy to be there purely because it's a great platform for especially the companies like us who are still very small from a financial services perspective. We will come into 0.00 something market share kind of thing, not even 1%. No, from that perspective, we believe that this kind of a disintermediation is a great outcome which can happen, and we can really build the journeys, the customer, and we can go to rural India. Like today, our USP is that we can give a 30,000 rupee loans, we can give 50,000 rupee loans, which most of the banks can't do it, and for which we really need that hockey stick kind of a leap of faith from the other stakeholders to say that yes, it can be built.
That's very clear. That brings me to Ramanji. You had a very interesting vantage point as the board and various other boards you had the honor of serving. What's your advice to NDC board and the management?
So let me just say that the country is sharply divided into GST and non-GST entities. There is a vast difference. You take any lender in this room or outside, ask them to lend to a non-GST entity, it's not going to happen. So I think what ONDC is really doing is spreading a network that allows formalization of a lot of very small suppliers, but yet we are never going to reach that 10, 12, 15 crore of small businessmen or women who will never get a GST registration because frankly there's too many difficulties surrounding the word GST. So I think ONDC would do a great job in getting those numbers of GST registered businesses from say today's maybe about 2 crore. If that reaches 5 crores in the next 2 or 3 years, I think ONDC would have done a great service. But within ONDC, I would say you've got to allow this architecture to flourish, where the lenders like Ashish and so many others need to come in and provide working capital to all those people at 10%. And that is really the only point, in fact, Shaji mentioned it right in the beginning, that if we allow for an income effect to the suppliers, where instead of paying 20% interest, they're paying 10% interest, that's what's going to create wealth amongst a lot of people. But for those 10 crore odd people who are not going to be under GST, I think we just have to ensure that the likes of a CGT MSC, where 80% of the loan is completely sovereign covered. When a bank lends, he knows that 80% is not a risk to him. It's only a 20% risk that he holds. So we have to be able to give that 30, 40,000 rupees to 10 crore people. So it's not a very large number when you look at the total. So in that, the risk to a bank is only 20%, of which I'm saying it, even if 30% people don't repay, you're still very good. So that's the numbers we need to put out and we need to work towards that.
Thank you. Thank you, sir. I've been told that we have Mr. Dilip Aspe, who's MD and CEO of NPCI, joined us online. Could we have him, please, connected? Okay. So Maybe let me invite Dr. Shahji. So I have twofold questions for you. One is, of course, the advice to NDC, but from where you sit, if you have to project 5 years from now in terms of the MSME credit and financial services products being provided to MSME consumers and the agri-based MSMEs, how do you see the growth? The reason I'm very curious to know your view is that, from where I sit, I see a great push coming from Bharat Sarkar, also from the cooperative ministry in expanding the credit using various forms of institutional architecture we have at hand, either in the agriculture ecosystem or the cooperative ecosystem or the overlap to expand the availability of credit in a massive way. So how do you see that fast forward 5 years, and linked to that, what's your advice to NDC?
Yeah, here 2 points. One is that what I feel is that an e-commerce company is valued in terms of the customers it has. So now for ONDC, it is important that the buyers should be constantly engaged, and there should be some sort of a frictionless real-time user experience. So forcing the buyers to come again and again. So that's where volumes get built up. That's where, in the private sector terms, valuation gets built up. So ONDC should work towards that, improving the user interface in terms of the buyer's side. Seller side, of course, we have to democratize a lot of activities, and we are doing the capacity building. We are doing the sellers app type of thing. We are educating capacity. A lot of things from the seller side we are doing. From the buyer side, a lot of things I think the ONDC need to do. That is one point. Second point is that how this new to credit type of customers, the farmers, the MSMEs, can be onboarded. So what necessarily we are now trying to do is that we are democratizing banking in terms of computerizing the FPOs, the computerizing the primary societies and such other things. So that means a wealth of information is coming, which need to be leveraged through proper form. And even the newest of the fintech companies can look at that data. We'll make it available because it's a digital public good which we are trying to build, where the sellers, or rather the players, can be, if they are creating value for the farmer and the MSME customer, we'll be interested. So we are here to give the welfare to those people. In that, with the Oleum game, it's around 30 crore customers are coming to the digitized environment. So that means it will be a wealth of information, and any type of innovative products can be there to engage with them. But then, as a development financial institution, we will be worried about the cost of accessing credit, which includes the interest rate and other service charges and all. We will try to protect the weaker. So, provided that is protected, I think the players we are open to engage with fintech players.
Thanks for leaving us on that optimistic note. Just checking again if we have our participants joining online. Unleash? Do we have him? Okay. Okay. Okay, we can continue. Okay. All right. So, this is me because I work on climate. I won't let you go, Dr. Shahji, unless I ask about impacts of climate change on Indian agriculture, the way NABARD is thinking, because it's going to impact smallholder farmers, the producers, a big time, people who store and sell big time, and consumers, whether it's the food inflation or just access. So give us a view of NABARD as the principal institution. How are you internalizing climate as a risk and in your financial products to your customers, the farmers and the industry surrounding it?
Yeah. See, unfortunately, Indian agriculture is heavily fragmented. And because of the fragmentation, the farmers do not have the wherewithal to understand the impact the climate has on them. And even if they know about the impact, it will be difficult for them to take mitigation or adaptive measures. I'll be very brief. So here, so first of all, we need to, as we go ahead in building climate resilience, we need to protect the current income of the farmer.
Absolutely.
So that is one thing. Once it is protected, and we can't impose tax on him in terms of compliances and all. So it should be a voluntary type of thing. We can't be having a regulatory type of activities where they need to take that. That will increase their cost and it will be pushing them out of rather formal systems. So we need to have a voluntary type of compliances. For that, we need to build capacity. So we are working with various entities, including international entities, to build that voluntary carbon market. That is one thing. Second thing, to protect their current income from the vagaries of the weather. So as you all know, because of the climate, the net cropped area is coming down. So there we need to increase the production. So recently, how the productivity can be increased. That is one area which we need to, with the available land. So there, around 30 to 40% headroom is available when you see the international productivity and all. So that means we need to have some sort of GM type of thing. So we need to have a policy on that. So we are actively engaging with the government to improve the productivity. So these things, we need to build. Of course, hopefully, with lesser cost to the farmer, we'll be able to meet the climate risk in a very effective manner.
Thank you. That's very reassuring that it's, beeping on your radar and you have solutions for Indian farmers. With that, let me invite Mr. Dilip Aswai, who is the MD and CEO of NPCI and architect of UPI and RuPay. Since the beginning of this session and maybe other sessions, everybody is talking about ONDC having its UPI movement. Given your association with UPI, give us a sense, what can ONDC learn from the UPI's growth journey in terms of integrating financial products seamlessly into the commerce flows? Floor is yours.
So, as we speak about ONDC as an DPI, there is no question in anybody's mind that it has a great relevance and systemic importance to the growth of the country, self-reliance of the country. So I think there is no question about this in anybody's mind. The question is, how do we really, and while you speak about UPI kind of a growth, I think it may be a little bit of an unrealistic expectation, because the payment is fairly day-to-day need, and commerce may be day-to-day or may not be day-to-day need. So we'll have to keep that in mind, that commerce is much more complex, commerce is much more complicated than the payment system transactions. The second point is, I think, the ONDC is now 2-3 years old, and we have started seeing some of the tractions. It is already growing towards 1 million transactions per day in next few months' time. I believe that, the ONDC is poised for the growth that we are looking at in the long term. And if you really ask me, what are the few things which kind of help UPI grow, and maybe the ONDC may look at or is looking at leveraging them. The point number one is, we would need some sort of investments in the fintech startups, the people who are especially working on the buyer side, right? If you look at the commerce growth on the consumer side, the Amazons of the world, Flipkart of the world, kind of put in a lot of investments, money to attract the buyers onto their platform, and continue to invest the money to engage the buyers. I think the ONDC must implement in due course the viable commercial model, so that the buyer's app ecosystem is able to attract the buyers onto the ONDC platform. I think that's the first thing which I believe is necessary to kind of create a sustainable growth in the commerce marketplace. The second thing I would also talk about is the success rate, the what you call consumer trust on grievance redressal, right? Those kind of things have been very, very important to attain the scale, right? And I would just give you an example. In the initial year of UPI, we were struggling. We had about 10% of technical declines, and everybody was actually talking that UPI, while we launched with so much of fanfare, what happened to the growth of UPI. But then definitely the government, RBI's active involvement to bring down the declines, the service assurance, the grievance redressal has been really helpful, and that kind of gained the trust in the consumer's mind that yes, UPI is reliable and we could actually scale. I can continue to use it for different types of transaction, and I think ONDC is at that particular juncture to kind of ensure that the grievance redressal returns are one of the best in the market, even compared to the other competitors, because ONDC is entering into the crowded market, and while everybody can say that we are only 7-8% of the total e-commerce penetration, but still it's a well established and existing market with the quick commerce players also now. So I think these are the couple of things based on my experience, I think are crucial for ONDC to kind of ensure that it gets right. One is the apps are well funded, are able to invest into the engagement of the buyers, are able to attract and engage with the buyers on the ONDC related services. And second is the declines, the service assurance, the returns are one of the best in the country.
Thank you, Dilipji. I'm sure ONDC management is taking copious notes of the lessons we could take from UPI's success and the initial kind of turnarounds you made in that journey. With that, let me just give a big thanks to all the stellar panelists who shared their wealth of experience and gave very, very specific advice on how to take ONDC to its next stage of growth and support Indian developmental journey. And let me invite you all to give them a big round of applause.
Thanks, Jagjit. Thank Asbeji from joining us from your Bombay office. Thank you everyone. May I request Shekhar Swamiji, if you can come forward and help us in paying our gratitude to the gentleman. Shri Ashish Goyal, co-founder 5. Shrikant PV, Chief Bajaj FinServ Digital Platforms. Dr. Shaji KV, Chairman, National Bank for Agriculture and Rural Development, NABARD. Shri Siva Subramanian Raman, Chairperson, Pension Fund Regulatory and Development Authority of India. After this, we have a small ceremony where we will be felicitating some of the young entrepreneurs who have onboarded digital commerce for the first time today. For this, may I request Shaji ji, if you can stay back after the photograph. Dr. Ashwini Mahajan, Harmeet ji, please come forward. हाँ जी सही है उत्कर्ष certificates. All the entrepreneurs, please come nearer to the stage I'll take everyone's name one by one. Please come forward. And after taking your certificate, you can come downstairs. Then we will have a joint group photo also. Babra ko. वो certificate. Shaji ji, you will be happy to note today they onboarded the digital commerce platform. Plus Payji is providing them with the payment gateway. And all 6 of them for the first time, they'll be joining the digital commerce space. And CIU will be hand-holding not only them, but also all others who will be joining through CIU in their digital journey. So, Ms. Shikha Mishra. Nagendra Kumar Chandra. So there's a Gond artist who has specially come from Madhya Pradesh, Amarkantak, Atmaram Shyam. So this is a tribal art form which you have seen outside. This is original art, and from today onwards you can buy from ONDC platforms. Balram Jindal, Deji Industry. Shaji ji, he has displayed his art outside. So Gond art is a Mamta Mohan Kapoor. Her husband is here, Mohan Kapoor ji. Amit Kapoor and Anchal Bora of Daksh Textiles. So Magic Pin has also assured that on their platforms, all these artists and entrepreneurs will be displayed. May I request everyone to come forward and have a group photo? Anchal, if you can bring everyone. So in today's journey, we have witnessed at least 32 speakers from all across. Harmi ji, have a seat. Shekhar ji, come forward.